So Nicole and I have known each other for a long time, and you know, it really is undeniable. You sit in really the most prominent role, one of the most prominent roles in global finance, and certainly I think maybe the most prominent role in Canadian finance. And so I think everyone would love to hear a little bit about your background and sort of how you started your journey in the financial world and how you ended up sort of, you know, where you are.
Sure, thank you. Thank you for that. It is a real pleasure to be here, actually. I've been looking really forward to coming here today. You know, my background was pretty simple. I grew up in southwestern Ontario. A small kind of Lambeth is where I lived for most of my upbringing, which is part of London, Ontario, and found myself at the Ivy School of Business after spending the first 3 years of my undergraduate thinking I was going into medicine. I was in a kinesiology program, had a 1-year cadaver experience, and just said, you know what, this is very interesting and amazing, but I got to do something else with my math skills, physics skills, etc. And so, very long-winded way, I ended up at Ivy doing the HBA program, and it really just opened my eyes to a whole different part of how I could use my brain, where my passions could really be utilized. And I started on the trading floor as a back office, you know, running around for the traders at Ontario Teachers, in fact. And it was in the late 90s. And a mentor at that time it was an individual by the name of Michael Lay. He was running the private equity program then called the Merchant Bank. I said, I want to be in the Merchant Bank. And he said, well, you probably need to go to Wall Street, get some experience, get an MBA, and come back and see us in a few years. So I did exactly that. I ended up starting at Solomon Smith Barney City, and then went back and did my MBA at Ivy and went to Teachers and knocked on the door and said, remember me? I said I wanted to be in the private equity group. And at the time, it was a program being led by Jim Leach, who's been really a lifelong mentor to me. And I just really had an incredible experience all 16 years working at Ontario Teachers, where I just had great mentors.
Yeah. So, you know, Teachers today is very different than it was back when you started, and it's really become, you know, synonymous with the Canadian model and really sort of innovation in, you know, pension fund investment management. But you know, take us back a little bit. What was it like when you first joined, and it's sort of more of an entrepreneurial environment? What was that like when you first started?
Yeah, again, I was really fortunate with my timing. The overall plan was being run by Claude Lamoureux and Bob Bircham. Again, like just iconic individuals, and from a governance, but also from an investing perspective. So to be able to start my career with those two individuals, in addition to Jim as mentors, was great. It was a very entrepreneurial environment. I remember joining the private equity team. There were 10 of us, and that included our assistants. And we had a mission or a goal of getting to 10 billion invested in private markets in 5 years. And I think we blew through that within a matter of just a few years. And it was really, you know, Jim's view at the time to be the first call, and we coined it as such, and we actually had a number of galas, as we called them, in this exact room, where we would invite our GP friends who we had been investing in some time and said, you know, listen, we really want to build our direct business. You need us. We need you to do that because we need to learn from you and make sure we have the right smart friends around the table as we co-invest or co-underwrite these deals. And I think that really was the era that really kicked off the real kind of Canadian model as people often think of it. The real Canadian model is, I think, in my opinion, and I think it's the case, is much more just about the governance that we have and the structure of our governance in Canada. But I think most think of the Maple Aid or the Canadian model really as a nod to the direct investing programs. And I think we just had a really great start and a great push, and we had a lot of really important partnerships in those early days. And there was always a spirit of innovation and push the envelope and, you know, forget the status quo, let's be different, let's be the first call, and what does that mean? And so we spent a lot of time making sure we were hiring great people, made sure that we were really thinking more through a global lens. And so I think that really contributed to the success in those early days.
That's what you mentioned, sort of working with funds in order to sort of build the relationships, understand different sectors. That was very progressive at that point. It's something that I think more and more families sort of think of when they look at sort of GPs. But can you talk a little bit about sort of the relevance of that kind of model to how families can think about investing in private markets funds and private equity funds?
Yeah, absolutely. I mean, there's so many different ways to tackle the question. I think first and foremost, even institutions, the individuals in the institutions only have so much time to spend on really developing strong, deep relationships. And the word, strategic partnership gets thrown around a lot. But really, what does that mean? It means it's, groups or individuals where you've built trust and you have an experience base that lines up with your values. It is a partnership that leads you places or gives you access to things that you otherwise wouldn't have. And it takes time to build. And so thinking through an institutional investor's lens, it was really important for us to align ourselves with a very sharp pencil. We weren't going to, spray and pray the capital all over the world. In fact, we had a very focused approach. We had a dozen or so relationships in North America that at the time were very sector focused because that's how we wanted, and we're trying to build up our own inside expertise and deploy the capital in North America. In Europe, we kind of had half a dozen partners, and I'd say I moved to Asia to open our Hong Kong office, and I'd say we had similarly, I'd say 5 or 6 truly strategic partners, because that's really that was a reasonable amount of time. Think about it as how many board seats can you sit on? There's only so many relationships that you can really build. So as a family, I think you have to kind of think similarly, like who are you going to spend your time with? And it's going to be a much smaller scale even than what I just described, presumably. And so it's building that trust and aligning yourself with a group that has that same long-term patient value creation and similar core values to you. And I think through that approach, it gives you the opportunity to learn alongside and make sure you have smart friends, the right eyeballs around the table, making sure you're leveraging those partnerships to build your own in-house expertise, whether it's along certain themes or certain asset classes. It's really that kind of hand-in-glove approach that really worked well to develop our direct program, I would say, at Ontario Teachers. And similarly, I think would be a good model to think about as a family.
Definitely. So speaking of families, when you transitioned out of the pension world, you joined a growth equity firm called Redbird Capital Partners, which is sort of where, how we met. And I think Redbird's a little bit interesting in that it was sort of a firm that was, even though it was seeded by a very large institutional investor, really the ethos of the firm was investing on behalf of family offices into family run businesses. And so can you give a little context of sort of that kind of model and that differing approach of sort of a fund that's more focused around families as opposed to a huge swath of LPs that are large institutions?
Sure, no, happy to do it. It's an interesting story. Another phenomenal mentor of mine, Neil Petroff, was the CIO at the time. And he ran, he called it his Benjamin Buttons strategy. He said, we're a mature fund. We need to make ourselves young again. And really what he meant was he needs to create an atmosphere, an environment where innovation was just core to our day-to-day. And so we set up a contest. And I love a contest. I'm competitive. So I was like, okay, the contest is a $2 billion allocation to kind of like a best ideas. And, he was obviously a very intelligent individual. He knew if he found 10 of those best ideas, he'd fund all 10 of them. But he had us broken up into teams that were cross-asset class seated, different individuals from different asset classes. And you had to come up with your best idea. And so at the time, I think just my experience, really this early stages of thinking about opening our Asia office and traveling the world and meeting some really interesting families, my idea was, let's create a pool of capital with a smart friend who will manage it on our teachers' behalf that is really just focused on leveraging the insights and expertise of these families who are not the families who have done what they've done and they're now thinking about legacy and succession and later on, but the individuals who are maybe at their second kick at the can, who have another idea in their back pocket. Let's fund and work alongside those individuals. And so that was really the inception of Redbird. Redbird was a $500 million commitment to Jerry Cardinal and his team. And what Jerry brought at the time was just a very innovative style of specifically investing in sports and media and entertainment, which was an area that teachers had familiarity with, but we had just sold down our MLSC position and we really were underweight, for lack of better words, and we saw that there was this really interesting opportunity across the spectrum of sports, media, and entertainment. And so the rest is history. The first pool of capital was strictly tied to just bringing in families alongside our institutional capital. The idea was to create a forum, if you will, where these families also could be co-investing so they could see the benefit of being a part of this ecosystem. It was to make sure we brought in those smart friends in every deal, if it was a real estate deal. And it was a open, that was the one interesting thing. It wasn't a just growth equity. It was across a sliding scale of opportunity, risk, reward. Everything from infrastructure-like things to growth equity. And from there, you know, it was the science experiment just kind of took off. And we just saw the real benefit of having a smart friend at the core, AKA Redbird, leveraging the capital of an institution, married alongside a bunch of really smart families, individuals that we were all very aligned in where and how we wanted to create value. And so that was the beginning stages. Now, as you know, as the story goes on, that's almost a decade ago, and Redbird is now much larger and has lots of institutional investors. But that core experiment, to me, was wildly successful in my mind, both from an investment perspective, but also just in watching what those families were able to do and how they were able to grow. And that's really what I was excited about. It was how can the pension learn and garner more, I don't know, get more access to deals, but more importantly, leverage the insights and knowledge through entrepreneurs who have clearly knew what they were doing because they now were their own family offices that were trying to do their next big thing.
Makes a lot of sense. And also, you know, on that sort of note, when you think from a Canadian family lens, look at some asset classes or sectors that maybe aren't as prevalent in our economy, more difficult to invest in. When you think of things like sports, media, telecom, et cetera, how would you sort of contemplate or advise, say, families in terms of like, how do they access those spaces? How do they look at opportunities? Is it getting out there and finding the Redbirds of the world? Is it other means of doing that? Or what would be your sort of overall thoughts on that?
Yeah, again, I think, you know, with limited resources being human capital, time, et cetera, I think number one is aligning yourself with a few smart friends or groups that give you, they're the arms and legs a little bit to help the families, help the individuals find some of those opportunities. You want to be in those types of arrangements if you were able to see line of sight to great opportunities that line up with your value base. I think it certainly helps with this whole notion of let's make sure we're diversified, especially in current market conditions. And I think access to some of the opportunities that, you know, large institutions like us are accessing or thinking about or trying to access right now are sometimes few and far between for families. And so you kind of need to find an angle or a door into some of the alternatives through smart friends, through partners. And so I think it's don't spread yourself too thin. Find a couple dedicated strategic partnerships that are giving you not only access to investments, but advice and oversight. And make it so that the end goal is that you walk away from that partnership down the road better informed and almost able to do it on your own. And we, at Teachers, we would often say that to our strategic partners. We'd say, if this works, it means in 5 years from now, we don't need each other because you've benefited from our capital, you've been able to grow your business in the way that you want to, and we have learned so much from you that we are experts in our own right and probably don't need to have a similar expensive arrangement. But for the time being, we're gonna hang on tight and we're gonna learn as much as we can and we're gonna go do some great investing.
Yeah. So I know when you were at Redbird, you were working on a number of sort of impact-related initiatives, and then I assume that you just sort of got a call, maybe out of nowhere, to start maybe some of the conversations with CalPERS. So, I mean, walk us through a little bit, just the sort of like, the sort of emotions that go with like contemplating a move like that, and then just the complexity of sort of like how that process works and how you processed it and how it all came together.
Including all the mentors I mentored calling me saying, "What the heck are you doing?" Yeah. Okay. No, listen, I think COVID and those lonely moments of all sitting in our home offices certainly allows for time to contemplate, what moves you and what drives you. And I've always been a very mission, purpose-driven person who likes knowing that I'm investing in using my tools and my toolkit, my skill set for a mission. And so I'd say it was pretty serendipitous. I was, in fact, starting to talk to a number of the Canadian plans about, shake the tree a little bit and say, hey, we're really not doing much to support underfunded minorities, whether it's women or Black, Indigenous people of color. We've got all kinds of rah-rah campaigns around this. But I'm looking at all of your annual reports, and I know that not a lot of capital sitting up here in Canada is doing much to support those underfunded minorities. And so that started off a series of conversations, including reaching out to CalPERS to say, gee, we should be doing something together with some of the large US plans, and maybe I can just be helpful in marrying capital in Canada with capital in the US to go after this underfunded market and get this flywheel going of opportunity. And so that one thing led to another, and next thing you know, I'm talking about the Canadian model, and I'm presenting to the board on our risk management framework. Yeah. Next thing you know, I'm the CIO.
That's amazing. Just for everyone's benefit, can you give a little bit of an overview of CalPERS and just the scope of it? I know it's probably not as top of mind here versus some of the larger Canadian pension funds, but it really is just a massive organization and really one of the most prominent investors globally. Do you want to just give a little bit of an overview of sort of where you are today?
Sure.
And then maybe we can talk a little bit about sort of where you want to take things and what your vision is for the organization.
Absolutely. U.S. pension plans are their own animals compared to what we are really fortunate to have here in Canada, mainly because of the governance structure. We have, in Canada, we have very professional boards that from inception, basically, that have been set up with the mission to pay benefits in a professional way with arm's length from government, arm's length, for the most part, from real undercurrents of political views, et cetera. And in Canada, we're able to attract and retain world-class talent because we can pay for that world-class talent. Hop over the border to the U.S. pension system. They're state-owned entities. I work for the state of California now. We have a board that is our constituents. So we have 4 labor unions, for example. The chair of our board very proudly drove a school bus for a very long time. It is a different animal altogether. And so with that comes different challenges. And I think the way that the Canadian model has evolved over time, certainly being very progressive in investing in alternatives, being very progressive in looking at active risk and generating alpha separately from how we think about the beta, which pays the bills, but we need the alpha to really pay the pensions. The U.S. has just essentially been a policy, set it and let it go. Every few years, depending on the plan, and in CalPERS' case, every 4 years, a strategic asset allocation is approved by the board to hit a 7% return. And there's not much done in the way of thinking about tilts or pivots. It's just beta. And so, that presents challenges when we're no longer where we were 1, 2, 3, 5 years ago. It's a very different environment, and it's very difficult to achieve the 7% returns without having a shift in approach, if you will.
Of course. And so in terms of getting the buy-in and the group to accept your vision of sort of where you want to take things, I know that's a very complex sort of navigation. And so talk a little bit about sort of where you do want to take things, what you might take sort of some of your experience with the Canadian pension funds, or looking at sort of more innovations in terms of where you can guide CalPERS.
Sure. Yeah, I've been using kind of 2 buzzwords with the board since I arrived. One being innovation, and the other being resiliency. And so the strategic objectives that I've put in front of them all tie back to either being one or both of an innovation play or a resiliency play. And so really it's just, it's a massive cruise ship to shift. And as we all know, culture plays such an important role in being able to make such big shifts. And so it's really started, I've been there 7 months now, it's really started with kind of identifying what the vision is and doing a ton of educating. Educate why, educate, why certain things were done in a certain way that don't work. The last board meeting I had, which was awkward, it was a 10-year look back. It was, what have we done for the last 10 years that just hasn't worked? And why hasn't it worked? And what could we be doing differently? And that was a request of the board. And while my entire team was very nervous and not happy about the request, I said, you know what, let's take this on. Let's take a great, humble look at what we've been doing, and let's start thinking about different tools that we can be applying, different approaches we can be applying. So it's everything from just frankly changing the governance structure. The $500 billion, let's call it that, was all being allocated in a very siloed approach. There's really no top-down portfolio management happening. And when portfolio construction, risk management, none of that was really being done from a top-down perspective. So that would be number one. Number two, it really has been a kind of set it and let it go allocation mentality, as opposed to let's identify a core portfolio, let's call that beta, and then let's go over here and set an active risk budget that we all have to make sure we're getting paid for the risks that we're taking, and let's call that our alpha program. And we don't have that today at CalPERS. And so that's going to be a massive cultural shift, to have individuals understand that they're going to own a risk budget. They're going to have to make a return on that risk. And we're going to be judged on, and we're going to be held accountable for whether we're delivering alpha or not. And so that in and of itself, that's a behavioral shift, a cultural shift. That tees us up for being able to do things a bit different. So meaning, certainly private markets is an area of focus. It's my background. It's what I spent a lot of time talking to the board about in those early days. The allocation to private markets in general has been woefully low forever. And when we did our 10-year look back, the 10 years that we weren't participating in private equity alone, burned through or did not deliver, missed out on almost $20 billion. And those are massive numbers when your pension is only 60, 70% funded, depending on any given day. And so private markets will be a huge area of focus. Coming from Canada, I often say, I don't have this magic bag or this magic book of spells that I can use. But what I can promise is, if we think through a 10-year lens, and we think that this is kind of a crawl before you walk, before you run approach to getting to more direct investing, and really why you would get there or want to go there is it's certainly more cost efficient, et cetera. If we can all think about this through a 10-year lens and stop pulse taking in the way that our strategic asset allocation is looked at today, very taking the pulse of, what's our tracking error, or how many bips over the benchmark are we, then I think we're going to have some really great successes. But it's a journey. It's certainly a journey, and it'll be a mindset shift for many.
Yeah, I'd be curious about your perspective on sort of relationships in private markets, where it seems that sort of building relationships over multiple years, often multiple decades, play a more sort of prominent role in good investing than say in the public markets. And so when you think about some of the firms that you might have worked with back 15, 16 years ago when you were teachers, like are some of those relationships coming around, and how do you view that? And maybe even in the sort of family lens, that notion of sort of leveraging personal relationships, social networks to access great investment talent.
Yeah, investing is a relationship business. Certainly as an asset management firm, asset allocator, our talent is going up and down the elevators every day. That is what we are. But those relationships that we form over time, they really do make or break. And I coming into CalPERS, who has a history of being deemed as not a great partner, it really shows through. It shows through in our inability to access certain things. It shows through in our inability to be anyone's first call. It's starting to change slightly, but it goes back to you have to you have to be able to form long-term trusted relationships. It has to be a two-way street. It can't be, well, we have all the capital, so do as we say, and we're going to hit you with a stick. But at the same time, if the partner doesn't see that there's a win-win in kind of nurturing that relationship, then it isn't really ever going to become truly a strategic partnership. And so I think for families, as we mentioned earlier on, I think establishing a core handful maybe of individuals that you feel are really looking out for the long-term, same value creation, core set of values. I think over time that's the best way to go, as opposed to sprinkling, your time, energy, and capital across many places.
So in terms of when we think about broader themes of impact investing, and you mentioned the work you were doing at Redbird and those conversations with pension funds, but now that you've been there at CalPERS for 7 months, where do certain themes like wealth inequality, supporting female and minority-owned businesses, climate change, and climate tech investments, where does that fit into your general lens and vision, both at CalPERS and then thinking about the broader pension fund world?
Sure. So at CalPERS, out of the gate, I have a couple, let's call it 3 key hires that I'm going after. One of which is a managing investment director, which would be kind of a direct report into myself, of sustainable investing. CalPERS has a great reputation and a great history of being out in front on many climate issues. We've done it more through an advocacy lens. We've done it a little bit through an engagement lens, but arguably I think we have a lot to improve on that front. And there's just so much more we could be doing. And so when I think about the main initiatives that I've outlined for the board, one is certainly around investing in underfunded minorities. And I hope to be able to announce quite a large initiative that we'll launch at CalPERS. And I hope to go visit the Canadians and say, hey, jump on board. This is super important stuff. And it's not charity. It's to make great investments, but funding the underfunded minorities, and it'll get this flywheel going. So I hope to be able to announce something on that front by year end. The second bucket is around human capital management. So, we've spent a bunch of time making sure that we're being a bit of a watchdog and an advocate on the human capital management side. And so doing more there with our partners is an area of focus. The third big piece, which was already well underway, and the team has done a phenomenal job by the time I got there, is just in general on ESG data convergence. So going out to 200 of our GP friends and saying, we got to get our act together. We got to start collecting data, start standardizing things so that we can all start reporting better. And so that's well underway. But again, using the relationships that we have, there are a number of folks who have not yet signed up to that. And so my hope is to really make that an important piece of our underwriting, to say, are your values aligned with ours with respect to at least gathering and reporting on the data? Yeah. And then the fourth bucket is just on, our path to net zero in general. And what does that mean? And, how do we do that in a thoughtful way? How do we push, especially sitting in California? It's probably the thing I get pinged on the most, and have crowds standing in the back of everything we do is public. All my meetings are public. And so I get a big audience on anything having to do with our path to net zero. And so what does that mean? What does our sustainable investing program going forward look like? How do we think about it through cleaning up supply chains, aligning ourselves more into renewable energy type innovation? And so those are the main buckets that I would say that I'm focused on.
Just on that Canadian front, and you've now been in Sacramento for a while, and sitting obviously in a position where you're meeting with leaders from around the world, very interesting sort of thought leaders, innovators. When you look at Canada, the Canadian economy, leadership in corporate perspective, I mean, what are your thoughts in terms of what we could be doing better from an innovation perspective? And then maybe also from like a family lens, thinking about, impact investing or other sort of philanthropic initiatives. What would be your perspective on what we could sort of up our game in?
It's a great question. I mean, I feel like we are this undiscovered area. We've got some of the most talented venture investors sitting up here in Canada. We have some of the most talented underfunded minorities, women and Black, Indigenous, people of color in general, sitting up here in Canada. We're so Canadian, you know.
Yeah.
For all of the calls that I got from folks in the US and in Europe and in China and in India when I started, I can count on one hand my Canadian friends who called and said, you know, now that you're at CalPERS, can we come visit you? Absolutely, because there's so much talent, there's so much opportunity. And yes, it is on such a smaller scale for the most part, certainly through the CalPERS lens. But that's okay. I mean, we have to diversify our portfolio. We have a bunch of very plain vanilla programs, but the whole thing of innovation is trying to look beyond the plain vanilla and the silos. And so I think we need to just be a little less Canadian and just get out there a little bit more. And I think we need to start, you know, using, displaying, finding the opportunity to showcase how well we're doing in parts like in our innovation sectors, for example. I think there's tremendous opportunity, obviously, within renewables up here. So, I mean, any well-performing sector that we would be looking at in the US or globally, Canada is at or greater, maybe just at a different scale. And so I'd say to families, you know, don't forget to look in your own backyard. I think spending time, certainly on some of the more innovative industries in our own backyard in Canada, I think will deliver at or better results than what we're going to see, you know, in rest of world for the coming time, for the coming cycle.
So last question. We're lucky enough to have a lot of the rising generation of some very wealthy Canadian families here. I know you have a daughter who's in college and a son in high school. You know, what is your advice for younger people as they think about sort of mapping out their career and opportunities for growth and really to sort of expand their minds and their lenses?
Yeah, you know, I think the observations that I've made in my travels and just in years of observing really closely what's made different individuals successful, or having watched, now being in the industry 20 years plus myself, seeing, you know, who has been able to do really well, not. There's a few common themes. Number one is network, build your network. You know, don't be afraid to go outside of your very close comfort zone. You know, it's really important to have global perspective. I have a great example of that. When I was running the Asia office sitting in Hong Kong, I would host these entrepreneur dinners where the entrepreneurs, mostly venture related, sit around a table, they'd, you know, all share what they were up to. And a lot of it was very collaborative. It was like, oh, that's what you're doing. Oh, I'm doing something similar. How can we collaborate? How can we fix it? I'd fly over to the West Coast, Silicon Valley, host very similar dinner, and you'd have a table of 20 people, 5 of which are doing the same thing. Yeah. And it was so, like, arms crossed, not sharing.
Yeah.
And it was so, like, you could just feel it in the air, the lost opportunity. It was like, oh my goodness, if you guys can't see the benefit of networking and the sum of 1 + 1 can be much more than 2, by being more collaborative, you're really missing out. Yeah. So I'd say, you know, building the network. The second piece I would say is just be humble. You know, if you're kind and you work hard and demonstrate that you have a really strong work ethic, people want to see you succeed. Yeah. And having a more humble demeanor about what you're up to or what you've done or where you're going, I just think adds to the probability that when you combine that with kindness and working hard, that people are going to want to see you be a success.
Well, I think you're certainly living both of those. And so I can't thank you enough for joining us. And we really, really appreciate it.
Yeah, my pleasure. Thank you.
Thank you. Thank you so much for joining us.
That was great.
Thank you so much.
Amazing.